day before yesterday, an article doing the rounds in the market was one which is talking about the end of the equity cult or the equity business. I found that a little extreme. Some of the things written included, the kind of mismanagement or activities that were not really positive, or rather there was no way to earn returns from the markets, but that investors in general did not understand that this was not a place for long-term investment. I find most of that not accurate. I think the right way to look at it is that investors needed to get educated, and you needed more transparent systems. And part of what happened after 1992-94 was a step in that direction. Prior to that, you had markets which were pretty closed. Companies did not report any news or earnings for 6 months at a stretch. You could not really read the balance sheets without a cash flow statement. And there were lots of fly-by-night operations that happened. Many companies that went down the tube. So it was a very different time, after which a lot of steps were taken by the government, SEBI, to put in place, the right rules and regulations that allowed investors to be better informed. You got DMAT, you got online trading, you got access to the best brokerage rates. So I think it's been a really great time as far as improving the product offering to investors has been. But coming back to the equity cult, I think the equity cult probably died with 94 because of all that was there back then. And despite these measures, it has actually not come back because of a trust deficit that continues to persist. And I think that's where the challenge is, and that's where the opportunity is. I think retail is still a big opportunity and a long way to go as far as retail investors investing in India is concerned. Because if you just look at the household savings ratio in 92-94, it had reached double digits, almost crossing 20%, and today it's at less than 5%. So that itself tells you that the cult never really came back, even though you got a bull market. And the opportunity really lies in building that part of the mass market and giving it the right confidence and place to really earn. And some of that might lie in training, educating, or even investors themselves becoming more aware, which has been the case. I think over the years they've become more aware of what's going on. Another signature of this trend has been the size of the asset management industry. If I just look at its size maybe 10 years back at 1 to 1.5 lakh crores, and now today at 7 lakh crores, it's almost as if the growth is essentially the growth in the market cap of the market. Have you really grown more than that? Have you captured a larger market share, a larger mind of the saving community? And that's where I think you still have a deficit. So somewhere that has not happened, and I think that also remains a challenge that asset management really needs to deal with. So to sum up, my sense is that there's a huge opportunity in investing in retail. I don't think long-term investment itself goes for a toss. I think long-term investment requires the right knowledge of the business cycle, how to measure it, and that's why I spend so much time discussing the value wave and quantitative cycle, so that where we are in the cycle of investment versus whatever short-term moves that might be coming in the news that you read every day. And there is a time to be invested, to buy and hold, and then there is a time where you really need to stay out of markets unless you're really trying to play the game of capturing the right stock in the right sector, where only 20% of the market is performing and 80% of the market is not performing. Otherwise, it's just a time to stay away till the next big opportunity for long-term investment shows up. And once you look at it that way, then your whole perspective towards markets changes, and I think that's where I am taking my readers with the perspective that I try to give in India Charts. That's all from me today. Thank you.